Requirement B, discuss the correct classification, recognition, and measurement of the option to acquire ordinary shares in All Grey Limited in the financial statements of ExpressFit Limited for the financial reporting period ended 31 December 20.21 in terms of IFRS 9. Okay guys, 4 marks. Now how much do we need to write? Okay, if you look at this, most probably one full sentence will be 1 mark, therefore 4 full sentences. And we need to touch on the classification, recognition, and our measurement. As always, plan of action. Identify your theory, apply your theory, and conclude. Now, what is the conclusion here? How to classify, how to recognize, and how to measure. Okay, how do we apply the theory? You need to include names of the entities. We are looking at an option. You need to include the details of the scenario. Right, let's read through the scenario. ExpressFit acquired an option to purchase 222,000 ordinary shares in All Grey Limited at R5.44 per share, when All Grey's shares were trading at the price of R5.44. ExpressFit consider the ordinary shares of All Grey Limited to be a viable investment for speculative purposes. ExpressFit paid $81,800 for the option on 20 September 2021 and also had to pay a commission of 2% of the purchase price of the option to brokers. The option will expire on 20 February 2022. On 31 December 2021, the option was worth $135,700, at which date All Grey shares traded at $6.42. Now, when we look at this, guys, they indicate to us that this is for speculative purposes. Okay, now on a new page, I will indicate that this is my part B, and as always, I prefer to make use of a timeline. Our acquisition date is 30 September 2021. Remember, they purchased the option and they've indicated to us at a value of $81,800. Our year end is 31 December 2021, and they've provided us with the fair value of the option being $135,700. Now remember, we need to talk about classification, recognition, and measurement. They purchased the option for speculative purposes. Now what does this mean, guys? To buy and sell, buy and sell. Therefore, when we look at our principles in terms of step 1, step 2, and step 3, in which business model will this option fall into? Investment in equity instruments held for trading, therefore should be recognized at fair value through profit or loss, the classification, and measured at fair value, and any gains or losses should be recognized in our profit or loss. Now this is what we now need to include. Remember, this is our theory, but we now need to apply this theory. I've included our theory, and on the left side of your screen, our names, guys, in terms of ExpressFit, the option, and All Grey. Now why? Because I want to indicate to you in terms of application how to apply. Okay, now when we look at this, what is the basic things that we do know? That our initial recognition date is 30 September 2021. Why? Because this is the date when ExpressFit and All Grey entered into the contract and became parties to this contract. Therefore, we are able to indicate that ExpressFit and All Grey, remember you need to include full sentences please, entered into the contract and became parties to the contract. Therefore, on 30 September 2021, this will be our initial recognition date. Okay, now we need to talk about classification. When you look at the right side, we need to talk about the classification. Therefore, identify the business model. Now, we are able to identify that ExpressFit purchased the option for what, guys? for speculative purposes. Therefore, the business model will be an investment in equity instruments held for trading. Okay, therefore, we are able to identify that the classification of the option, because we are applying the option, will be at fair value through profit or loss. Right. Therefore, on 30 September 2021, we will recognize the option at fair value. Okay. Now, when you look at the right side, we have touched on the classification. Now we need to look at our recognition. The recognition will be our journal entry on 30 September. We have a fair value of 81,800. Therefore, this will be the fair value that we need to include on 30 September at fair value of 81,800. Right. But what about the transaction costs? Now, if we refer to our principles, our rules in step number 4, guys, we are looking at a financial asset at fair value through profit or loss. Therefore, our transaction costs will be expensed. Therefore, we need to indicate on 30 September, which is initial recognition, there is transaction costs of 2% of the fair value, being the 81,800. And this should be expensed in our profit and loss. Okay. Now, subsequent measurement will be on 31 December 2021. Therefore, for subsequent measurement, which is 31 December 2021, oh guys, not 2020. I tend to still this year, guys, include 2021. 2020. Okay, any guys, you know what I mean. Okay. Subsequent measurement, 31 December 2021, should be at fair value. And then the movement in our fair value shall be recognized in our profit and loss. Right. 4 marks, guys. Therefore, when you look at this, we are able to include that the fair value will be the amount of 135,700, and the movement calculation is easy, therefore I will include this. However, they did not indicate any calculations, but we are talking about measurement, guys. Therefore, I will quickly include this because this is an easy calculation, 53900, right? And now, guys, we have met the requirement measurements as well. Okay, now what I want you to do is look at the solution and then identify all of the marks that we were able to obtain. You will identify that there is a last sentence there where they've indicated that the fair value will not be recognized through OCI.